In this video, we're going to talk about some news that's scaring Bitcoin investors, which people are calling the Bitcoin crash. More than 80,000 Bitcoins were sold, which amounts to around, let me check my notes, $9.53 billion. And what's even stranger is that these are all wallets that hadn't been touched for over 14 years. And suddenly, all in a coordinated way, almost at the same time, completely emptying the wallets. So the question that remains is, were these wallets actually lost Bitcoin wallets that somehow someone managed to access? Or is it actually stolen money, like in a recent video I made on the channel about people who stole money and tried to buy Bitcoin, but now they're selling those Bitcoins? How did this happen? Is blockchain really more secure? I'm going to analyze all of this in today's video, but first, comment below. Do you invest in cryptocurrencies? Do you own any Bitcoins? Leave a comment because I want to know. I'll make myself bigger here too. Let's let S each be on one side here. Let's go. 3, 2, 1, go. This is Safe Source. And now we're going to talk about a potentially extremely serious Bitcoin bug. Okay? Something that hasn't been cataloged yet. It might not even be a bug. Okay? It might not be a bug. It could be a bug that was already known in the past and has just been exploited now, or it could be a completely new bug, which is a pretty complicated situation because we're talking about, what, 80,000 Bitcoins here, which amounts to $8.6 billion, my friend. That's a lot of money. All of this was moved, on the 4th of July by someone from old Bitcoin wallets. Let's try to understand this because there are a lot of aspects to this. The person who undertook this action hired a consulting firm, a company comprised of experienced lawyers and skilled financiers in New York, to meticulously ensure the complete legitimacy of this entire story. The whole thing is very strange, especially because you can imagine all sorts of scam 7, the scam where the person is actually the original owner of the wallet and is now claiming they stole it, that they took it for themselves. Let's try to understand.
Yeah, if you go along with this story that actually he's the owner of the wallet, but then suddenly he says he's not, wow, that creates a security issue, so to speak, because it doesn't matter whether it's true or not. What matters is whether the market believes it's true. And if they believe it's true, that the security was really breached, wow, Bitcoin, look, it drops a lot and then suddenly the guy buys more. Anyway, the market is very emotional, right? And it doesn't matter whether it's true or not. What matters is whether the market believes it or not.
This case here, this news was suggested by several other people. Thanks to everyone who suggested news on our website at safesource.com. It's safesrc.com, and thank you for watching our video. If you like our content, please leave a like and subscribe to our channel, okay? So here it is, look. Who broke Bitcoin on the 4th of July? So from what they're saying here, Bitcoin was broken on the 4th of July. They took 80,000 Bitcoins from a wallet, in fact, from 8 wallets, each with 10,000 Bitcoins. And this could be the first real exploit of Bitcoin, right? Actually, it's not the first, because as you followed here on my channel, I have a series of videos where I go over all the bugs in Bitcoin's history, right? Bitcoin has had a series of bugs throughout its history and so on. They were all resolved. Nowadays, the system is very solid and all that. But yeah, there were bugs in the past and there are still bugs from time to time. It's just that it's rare for there to be bugs where you can actually take money from someone. That kind of bug is a very serious one, right?
What's strange is that Bitcoin over the last 12 months has been appreciating a lot. And people who understand Bitcoin are saying this is just the beginning. With all these wars, disputes over interest rates, inflation, high interest rates, all these uncertainty actually works in Bitcoin's favor, right? People, countries, governments printing money, causing inflation that's good for Bitcoin. Why? Because Bitcoin is deflationary, not inflationary, in other words. It's deflationary, meaning there are fewer and fewer of them over time. And because there are fewer and fewer, it ends up being valuable. It's about scarcity. Less there is, the better it is for the asset, so to speak. Because fewer people will have it, so people will want it even more. So that's basically the reasoning. Not to mention it's a currency that doesn't have a government, doesn't have an owner, no country invented it, and so on. But if we're in this scenario where it's appreciating, why sell everything, right? And all at once, even why not sell gradually, keep some, then it appreciates more, sell a bit more, then if it depreciates, buy? No, they sold everything all at once after it had been untouched for 14 years. It's very strange. It's very orchestrated and organized, right? Because they hired several lawyers as Peter rightly pointed out.
Right? So here it is. Look, it's Bitcoin whale on the 4th of July. $8,763,000,000 were moved in July, right? The 4th of July, American Independence Day, right?
Man, I wish this would end up in my wallet.
Now here, look, it's not just big, it's imprecise. It's very precise. There were 8 coordinated transactions in the same block at the same moment. So the person already knew what they were going to do, already had all the information to do it, made all 8 transactions immediately. Everything went into the same block, was approved in the same block, the person.
Look at that, all on the same day, the same amount, look for the same value. It almost looks like a bug, right? It almost seems like it's fake, doesn't it? It's very, very strange. And look, it gives you that feeling like something is happening that you don't know about, and the market senses it. This definitely devalues Bitcoin.
They received the money right after, didn't they? So what could this be, right? Well, there are several hypotheses. One hypothesis you can't rule out, and it's important to keep in mind, is that the person actually owned those Bitcoins, right? This person created those wallets back in 2011 and now wanted to use the money. So what trick did they use to do that, right? We're going to see here what the trick is. Why? Because this is the person who bought this money back in 2011, bought a lot of Bitcoin. This already had value. Rich spent $54,000 in 2011. Look, nobody spends $54,000 on a currency that back in 2011 nobody even really knew existed or what that thing was, right? Even for those who really believed in Bitcoin, taking $54,000 and buying Bitcoin with it, no, that's not a small amount, it's something. Okay, now it's worth billions, right? And sure, they made a lot of money, but there was no guarantee. They might not have made anything, right? But what happened? This person put that money in and now it's just sitting there. If they want to withdraw that money now, they'll have to pay income tax on it. They had income, right? They made money with those Bitcoins that just sat there all this time. So what we might be seeing here as well, I don't know, nobody has that information, but what we might actually be seeing here is this same person who already owned this wallet and is just doing a little legal trick that would explain, the transfers being so fast, right? Because think about it, if someone is carrying out some kind of attack, typically every attack involves some trial and error, right? You rarely get it right on the first try. Every internet breach, every kind of hack always involves some trial and error. You try this, then you try that, until eventually you succeed, and then you get in, right? But here, no, simply move the eight wallets, right? Right here, look. And but it could really be a flaw. Why could it be a flaw? These wallets are very old, right? The P2PKH format, which is the first Bitcoin wallet format, starts with a number 1. Is this address format? Is it bad? No, it's not bad. It's good. It works just as well as the current one. The only problem is that back then when Bitcoin was just starting out, nobody took Bitcoin very seriously. Nobody really thought Bitcoin would have value. It was more of a lab experiment. So when it came time to create a wallet, what does it mean to create a wallet? It's when you create the private key and public key pair for that wallet, right? And how do you create this parties pair, public key and private key? There's a video here on the channel where I talk about how symmetric cryptography works, for example, how it is. In that case, I use the RSA example, okay? In this case here, Bitcoin uses elliptic curves, but it's basically the same process. In the case of RSA, you pick 2 prime numbers, then those prime numbers are used in a series of calculations based on them. They have to be large prime numbers. You can't use small primes. I mean, in theory, you could do it with small primes, but then it's easy to break. So you use large prime numbers and do a series of calculations, and that's how you get your private key and public key from this. It all starts with randomness. So what's the problem, right? What they're saying here is that the randomness wasn't adequate. It was a very weak random number generator. Between 2010 and 2013, several wallets made critical mistakes by using insecure random number generators, right? For example, wallets that used Android before version 4.3 used the secure random function, right? Anyone who's a programmer knows there's the random function, rand, depending on the language and all that, and then there's secure random, which is better. But in the case of Android, there was a problem. And you could actually identify this random number generator. And if you can identify the random generator, you can generate the same key again, which means you've broken the encryption, right? Some wallets in JavaScript used math, random plus the timestamp, which generated low entropy and therefore could be guessed by brute force.
Man, if the guy found a bug and broke into 8 wallets and sold them, even if, well, He's certainly going to make money. He's going to have to pay taxes, right? Let's see precisely how much it was. Let's check here. Let's ask Gemini for help. I'm going to open a new window here and type in, look, how much was a Bitcoin worth in 2011, right? Like he said, let's see how much a Bitcoin was worth in 2011. Let's check it out. Go ahead and comment below, guys. What do you think about this situation? Do you think it's a scam or not? Leave a comment. Are you going to sell your Bitcoins? Or now that, maybe with the market's uncertainty, there might be a drop. Is it the right time to buy? Look, it was $30. Here, look, it was $30. No, hold on. At the beginning of 2011, the price of Bitcoin was approximately 30 cents? With the exchange rate at 160. Wow, it was 30 cents. 30 cents. And now in 2025, let's see here. And in 2025, I could just ask Google, right? Although I am asking Google, right? Because Gemini pulls from Google, right? So it was worth 30 cents. And now in 2025, it's worth 600. And Sino, no way. I want it in dollars. Where is it? Yeah, no, but could you please provide me with the current value of one single Bitcoin expressed in United States dollars at this very moment? All right, now let's check here. It recently passed 100,000, right? Oh, 117. So it was 30 cents and now it's 110, done 117,000. I mean, just imagine. Oh my God. Let's really dive into a fascinating question now. Come on, let's consider this hypothetical scenario. If I had the incredible foresight and opportunity to purchase a substantial 80,000 units of Bitcoin way back in the year 2011, specifically when each unit was valued at a mere 30 cents, right? Just 30 cents per coin, how much precisely would that initial investment be worth for me right now in the current year of 2025? It's a truly mind-boggling thought experiment. So if I bought how much would I have invested in 2011 and how much would I have now in 2025? In other words, how much did 80,000 Bitcoins cost me in 2011 at 30 cents each? And how much would I have now in 2025? Take a look. So he would have invested $24,000, right? $24,000 in 2011 to get those 80,000 Bitcoins. And now, according to Gemini, he has $9.4 billion. So he only invested $24,000 and now has $9.4 billion. Well, that's just too good. Now, you have to see how much he'll pay in taxes, but who cares if he pays 20%, 30% in taxes? What does it matter, right? Let's go back here. Wow, I even felt a little sick here.
Paper wallets that were also used, were generated by browsers and because of that also produced weak entropy and so on. So all of these here were problems that have already been identified in Bitcoin, and this kind of thing isn't used anymore. It's not a problem with Bitcoin itself, it's a problem with how the Bitcoin key is created, right? Nowadays, some tools can break or check millions of keys per second, right? If you only have 2 to the 32nd or 2 to the 64th possibilities, that's trivial. You can run that in minutes on your machine, right? So in other words, that could have been what happened. Now, I still think it was the first thing, okay? I think it was the owner of the wallets who actually moved this money. To me, it seems very clear. Why? Because the 10 wallets were created by the same person at the same time, and they put 10K in each one. So back then, the person valued Bitcoin, took $54,000, right? That's a lot, it's money. They put 10,000 Bitcoins in each wallet. One of them has a little more, 10.
Yeah, I don't know what calculation he did, right? But then it came out to just over $20,000, not $54,000, right? Anyway.
2009 here, anyway. Yeah, and then these people left it untouched all this time, right? So they're saying here that it could be random, it could be some other problem, but then there's...
And it really takes discipline, right? Because there were many times when Bitcoin dropped a lot, so his money melted away, then it went up, then it crashed again, then it went up more, crashed again, then went up even more. Anyway, he bought it and just forgot about it, right?
there's more detail. Then comes another detail in this story, which is the information about the messages. So when the person withdrew from these wallets now, right, withdrew from these old wallets, the old wallets start with a 1, see? The new ones are BC1 something. So they withdrew from these old wallets here and, yeah, left a message in each of these transactions. So look at what it says here. The first message, legal notice, legal warning. We have taken possession of this wallet and its contents. Period. We have taken possession of this wallet and its contents.
Damn, that sounds like theft, huh? Sounds like something a hacker would do, doesn't it?
We have taken possession. It's ours. Isn't it abandoned? Prove it. Why? With an on-chain transaction using the private key by September 30th. In other words, the guy is saying the following. He wants to use the law in the United States that if you find something in the US, that's not theft. You found the thing, it's yours. It's yours, you're fine.
So for example, if the person lost the key, it's abandoned. And if it's abandoned, you can take it. So like imagine he's saying exactly that, right? Even if it belongs to him, but if no thief, maybe it's not his, right? Maybe, right? And that maybe already messes up the market. It already messes up the market because if the guy can take something that's abandoned, okay, then the United States will say it's fine because it's abandoned, but he could use the same technology to take your Bitcoin. And that's where it gets complicated, right?
The money is yours, but you have to notify the world and give a 90-day period for a potential owner to claim that item. If within 90 days someone comes forward and proves that the item is theirs, then you have to give it to them. If it's not like that.
That's why he brought in the lawyers. Because just imagine he found out that it's possible to like access wallets from people who, for example, lost their passwords. So he found this out, then he notifies, right, hires the lawyers, announces that he's going to take possession because it's abandoned, gives the legal deadline, and if no one claims Zitan, no one will because they don't have the password, right? So in the end, it's abandoned, it's mine. There were even people who killed themselves, right? So if no one says it's mine, wow, what a perfect scam. Can you believe that?
So you won, right? So here it is. Look, isn't it abandoned? Prove this through an online transaction using the private key by the 30th of September. If the person owns the wallet, they have the private key, so they can prove it by the 30th of September, right? Yeah, look, notice to the owner. See the website solomonbros.com/ownernotes.quote. So here it is. Look, this site here, the guy made something here, Solomon Brothers, according to what they're saying here. I have an about page of this here. Look, Solomon Brothers is a firm. It's the financial and legal advisory firm in New York that represents the client who identified that some wallets that appear to be are abandoned and are at risk of being attacked by a bad actor now or in the future. Due to privacy, because of the privacy policy, we will not disclose who this client of the company is. The client took proactions, right? Took steps to notify the owners of the wallets. And it seems that last week, some of these wallets, not noticed a notice placed on the wallets, moving these assets to other wallets. Our client would never take any action that would adversely impact the crypto market and is invested in the success and future of cryptocurrencies, right?
Wow, that really looks like a scam. Seriously, it sounds like an old movie script. Wow.
So what he's saying is, I'm not going to blow all this money at once. No, I'm not trying to crash the cry, Bitcoin or anything like that, right? And in fact, by taking this action on his own, the client is creating an opportunity for the owners of these wallets who otherwise wouldn't have anything. What is he trying to say? The wallets have security vulnerabilities. If you did nothing, someone would end up stealing that money. Nobody knows who, so I stole it first. I can also, if you prove it shows, I'll give it back to you. I'm not going to keep it. I'll return it to you, right? And there are security problems and so on with abandoned wallets. And typically these wallets are abandoned by their owners when they lose the private key, and consequently a wallet without the key is practically worthless.
The only thing that's strange, like, is if he really took, wallets where like people lost their password, for example, so he left a message there, the person won't be able to move anything because they don't have the password. That's fine. But would they all have exactly the same amounts? That's the question, because they all had 10,000 and there was no movement at all,
Here's another thing. What he might be saying here is that he found a way to recover old lost wallets, right? This is a service that a lot of people will want. because there are people who say they had so many Bitcoins, I don't know, on their computer and then threw the hard drive away and all that, right? So if he sells this service, anyway, here it is. The client has no interest in claiming wallets that aren't actually abandoned. So those who have the private key can easily signal that the key isn't lost, and therefore that wallet hasn't been abandoned simply by sending a minimal transaction and moving the contents to a new wallet. So yeah, then he says at some point here, look, he says here, this is a legal notice posted in accordance with applicable law that gives the owner the opportunity to claim property that would otherwise be classified as lost or abandoned. The owner has to give a period of 90 days to respond to this notice. In other words, if the owner has valid proof of ownership, they must respond by the 10th of October 2025.
It's basically like adverse possession. You know, when you move into a property, right? Then you start sleeping there, then you start acting like the owner, then you plant things, do everything properly, paint the house, and time goes by. And at first, you know, you didn't break in or anything. Like, you didn't break a security system. You just moved in and started living there normally. Time goes by and no one complains. It's not like you put up a wall and now the former owner can just come in. It's simply abandoned. No one comes in, no one complains, no one tells you to leave. The bills aren't being paid because it's really abandoned. The bills are piling up and so on. And then after a legal period passes, that's it. You can register it in your name because it's like under adverse possession. Now the property is yours. That's pretty much how it works, man. You see something abandoned, you notify, no one complains. That's it. It's yours.
If no response is received within a reasonable time frame, the digital wallets and all their contents will be considered definitively confirmed as abandoned and therefore become the rightful property of the current owner, correct? That in short, yeah, the fact that the response may or may not provide in court evidence that you have relinquished all rights to those wallets and so on and so forth. So you can prove your ownership by making a transaction or by sending a message, right? There's a way, a contact form here that you can send, which is, what is your proof that you own one of these wallets, right? So in other words, what he's saying is, I found this wallet. The wallets were found. It's a found object. If it's found, it's his according to American law.
Just like your grandma would say, right? Finders keepers, right?
And that's the curious thing. Two, keep wondering if the wallet wasn't actually his. And he's doing this because he'll pay less tax this way. It seems like he set everything up here from a legal standpoint. He knows this will end up in court, that he's going to take it to court and all that to prove the wallet is his, and that's it. And then he can say, look, I found the wallet, it's mine, but he still has to pay income tax on it too, okay? When you find the treasure, you have to pay income tax on it. But yeah, maybe the income tax is lower. I don't know.
But that's a huge risk. If he loses this case, let's say the wallet is his, so he's doing this to pay less tax. But if, I don't know, the United States says, oh, it's the government's, now it belongs to the government because anyway, then that's what gets decided. So he's going to take that risk and then later he turns around and says, no, actually it was mine all along. Oh, so you lied under oath, right? That's a big risk, isn't it?
I have to admit, I don't know American law or taxes well enough to say for sure, but maybe that's actually the angle here, right? The guy has had this wallet since back then, and now he wants to move the funds and do it while paying as little tax as possible, which makes perfect sense, right? So this is really interesting. So what do you think?
I think it's complicated. I'm going with the conspiracy theory here. You know, like imagine first he somehow found it. He has the know-how to recover it. Wow. He could recover several wallets. If the law says that finders keepers applies and you just need to notify and so on, he could find a bunch of wallets. So he already gets that money and pays less tax. Besides that, he could also sell this service, right? Like if someone loses their password, he recovers it. So if no one claims it, it's his. If someone does claim it, then he provides the service. Now, if someone tries to say, oh, it's mine, but I'll pretend it's not and say I found it to avoid taxes, what if they lose the case? Then they lose the wallet. I think it's complicated, but anyway, leave your comment below. Do you invest in cryptocurrency? Do you think the guy broke the Bitcoin blockchain security system? Comment below, I want to know. I'll leave some videos here on this topic, technology, artificial intelligence, and so on, okay? I'll see you in those videos. See you soon.